the impact of the recent spate of news with Avinash Singh. He's joining us, works at SBICAP Securities with us to talk about his take on the situation. Avinash, good having you. Thanks much for joining in. I want to start off with the news-heavy companies and then move on to the space at large. Let's start off with Diwan Housing if we can. Two pieces of news. One is sources telling Bloomberg Quint that BOB has initiated the forensic audit on DHFL, and then the fact that the CEO has resigned as well, which is the company's intimation to the exchanges. What does this do to DHFL, one, and can there be a collateral damage to NBFC space and other institutions as a result of this piece of news?
Yeah, hi, good morning. So I would first take that the piece of news regarding CEO's resignation. So I have also read what they have filed to the exchanges, and if you read closely, I mean, it suggests that the CEO has been relieved from its current responsibility, but he has not dissociated himself with the company, and he has been moved to a new position as a sort of someone heading the retail business. And what I read it as a just sort of, I would say it comes in line what they have sort of announced their strategic alternatives, that they might do a sale of their retail piece of business that is relatively, you can say, a more granular, cleaner book where it will be easier to find even the buyers. There will be interest. So they have almost 60% of their entire loan book in retail mortgage. And so so that current CEO has moved to that role. So I would read it as just a sort of it's a that okay, moving forward with this plan of a strategic realignment. So there is not much to sort of read differently in that. Regarding that forensic audit piece, probably, I mean, once this the news or that rather that revelation by Cobra Post came, of course the banks would be taking, if at all, at I mean their call to just look into the allegation, look into assess the books. So I mean, again, that is something I would say, again, a procedure that will follow eventually once you have this kind of news or revelations.
Interesting. So the last few days, we've seen a bunch of these NBFCs come off quite rapidly as well. It's been chalk and cheese performance. Some of the lending companies like Edelweiss, for example, under a serious cloud. Others have had a chalk and cheese behavior. IIFL has fallen quite a bit. Motilal Oswal hasn't. We've seen some of the housing finance companies having a volatile time as well. What do you think is happening here? And let's dissect each of these one by one.
Yes, so I mean, to be honest, if you see, I mean, that it is broadly playing out the theme. So I mean, it has been sort of a stark contrast in that investor analyst sentiment over the last 1 year, almost slightly more than a year back. And the street investors were gung-ho on this NBFCs, I mean, impressed by their growth and sort of expanding margins. But things started to change once the era of easy and cheap money started to change direction. I mean, almost in the time of rising interest rate, your cost of funding started to go higher. That was the time when but the again, point to be noted here is that okay, it was not the rising cost of money that really led to this problem. It is eventually that what has unfolded since the time IL&FS crisis. It's the availability of money. So I mean, NBFCs have enjoyed sort of easy and cheap money, particularly from the wholesale market over the last 2-3 years, where money supply was abundant and that also was cheaper. And so
Avinash,
sort of
Avinash, sorry to come in. My point is, so this is now well discovered. The point is, despite this knowledge being there is serious pressure that is happening on select NBFCs vis-a-vis the others. Why is that the case? Why is it that Edelweiss as a stock is really taking it on the chin? IIFL has fallen, yes, 50% from its levels, but it's not as badly impacted as this one is. What's the difference, and what should people do with these names? I mean, the broad macro story is known now. Are there individual issues which are impacting each of these stocks? Let's start off with the brokerage names, then we'll move on to the insurance companies.
Yes. So in terms of brokerage, it is not the broking. If you look at the whether it's Edelweiss or IIFL or JM, I mean, of course, traditionally they have been known as brokers, but if you look at the broking piece that is going into their earnings or book value, that's very little. So eventually they have turned lenders. And in the lending space, it is just not about Edelweiss. You can just move your time horizon a bit here and there. But if you see Edelweiss, IIFL, JM, Aditya Birla Capital, the Piramals, everybody who has been sort of exposure to, particularly on the wholesale side, on the asset. So that is what I was continuing the story, that okay, a few months back it was focused more on the liability side only, that okay, wholesale liability was causing the trouble. Now over the last, you can say, a couple of months or a few weeks particularly, the intensified focus has shifted towards your asset side. On the asset side, whosoever has exposure, higher relatively exposure to the developer space, that is where the problem is. I mean, so you look at the names like Edelweiss, Aditya Birla Capital, IIFL, Piramas, all these guys have reasonably high exposure on the developer book. Now, is that really a new thing? Not really, because I mean, this is how their business model has been. But off late, the pressure has increased because of the increased tightness in the systemic liquidity, and also some of the banks expressing publicly or privately that I mean they will be going slow on funding the developers. So that has sort of added to this pressure that okay, what if I mean the NBFCs are right now not in a position to go with incremental lending, because I mean they are finding it difficult to raise funds to fund their asset or disbursements. At the same time, if the banks are going to go slow or freeze lending to the developers, there could be a real fund squeeze on the developer side, and that could sort of unravel some sort of a default from the developer. So it's a developer concern regarding developer book that has been sort of putting pressure on this stock. What is happening in the reality, I mean, if you talk to maybe developers or some of these lenders, they are saying that okay, things are difficult, but has sort of a lending or repayment stopped? Their answer is coming that no, that okay, it is still continuing business as usual. So that is not, but yes, the perception or expectation is that okay, if the banks are not going to sort of provide liquidity of funds to the developer in this hour of need, I mean, there could be a real pressure on them, and that may put in turn pressure on these financiers. So and that is where I mean, if you look, you can just shift the time. So if you look the last 10 days, probably it could be Edelweiss. If you move a bit back, it could be Aditya Birla Capital. So all the wholesale fund, yeah.
So are you then comfortable? Are you still uncomfortable going out and investing in these companies? I mean, there is no need to. My question is that a lot of people will look at the prices then and the prices now and believe that the pain is in the price. Do you believe the pain is in a price for an Aditya Birla Capital or an Edelweiss or an IIFL?
Yeah. So the prices definitely reflects that okay, a reasonable amount or most of the pain is in the price. But the question here would be twofold, that okay, is pain in the price? The answer would be likely yes. I mean, depending upon the names, you can have your pecking order. The second part, is the pain over? The answer will be definitely not. So I mean, going by the way, I mean, unless the banks come forward to sort of provide liquidity or fund to developers, particularly now you have elections on the horizon, so there are a lot of political plus other macro uncertainties. So looking that way, I mean, your next I would say at least a quarter or two is going to be painful time. So that way, I mean, your prices are reflecting the pain, but is the pain over? No. I mean, pain is going to continue for a couple of quarters. I mean, after that, at this point, definitely you would see a lot of value in these stocks, because I mean, they have certain sort of the competitive strength or brand. You can say that okay, that cannot be replicated overnight. One can today, when you are bearish, you can argue that okay, what is the competitive strength of these NBFCs? But the point is that okay, they are catering to certain class where I mean banks are not yet, despite that the banking system credit growth picking up, they are not going to cater to those classes. So the pain is going to last for a couple of more quarters. But yeah, so that answer, the pain is over? No. Yeah. Is the pain in price? Answer is probably yes.
Okay. My final question, a quick one. I don't know if do you have individually have coverage on Karur Vysya Bank, Avinash?
I mean, no, we do not have coverage on banks, and also, I mean, banking space is largely looked by one another teammates, so I would reserve my comment on banks.